Hello traders, welcome back to another video. This is our second example for bullish continuation using our one setup for life. This bullish continuation is at the New York Killzone. Currently, we are trading indices which is NQ. So our Killzone is 9:30 to 11 a.m. So first, we are on the daily time frame. We need to identify where the market is going. Are we going to continue higher or are we going lower? Are we taking out a liquidity or are we filling out an imbalance? So as we can see, price is overall bullish. We have here a retracement, continuation higher, and another retracement right here. So we are most likely to continue going higher. Let's zoom in. And the recent price action around this area, as we can see, the previous day just filled out this imbalance right here and is now trying to continue higher. Let's mark out this sell-side liquidity first, sell-side liquidity taken, and we form here an imbalance. So this is a daily fair value gap. 1 day FVG. And we filled out this imbalance right here. Remember, price is only looking for one of two things. It's either taking out a liquidity or filling out an imbalance. So since recently we have just filled an imbalance right here, the price action will most likely to look for a liquidity. We have here buy-side liquidity. This swing high has been taken by this swing high right here. So our nearest buy-side liquidity to take is this buy-side liquidity right here. So let's mark it out. This is previous weekly high. This right here is our previous weekly high. Right, so now let's go into the 4-hour time frame. Let's fix this one. Alright, so as we can see right here, we have here a sell-side liquidity sweep. And then the price has continued going higher. And now we are most likely to take out this previous weekly high right here. Now let's go into the 1-hour time frame. Let's fix this one right here. Alright, so since this example is using our setup at New York Killzone, let's go into the 9:30 a.m. open. Alright, so we have taken out this previous weekly high right here. And let's look for more price action. But still, let's mark this one. Let's wait until 9:30 and 8 a.m. Now we go into the 15-minute time frame. Let's move this one right here. Alright, so since we have taken out this previous weekly high right here, this is our latest buy-side liquidity to be taken. Let's mark it out. As we can see, the price went down lower. Let's see if it has reacted into a higher time frame PD array. As we can see, price went down and reacted into this 1-hour order block right here. Using our candle body, since we don't have any fair value gaps overlapping into this candle wick. As we can see, price beautifully respected the main threshold or the midpoint of that 1-hour fair value gap and is now trying to continue higher. Let's try to look into the 15-minute time frame. Let's mark out 9:30 to 11 a.m. Right, so we are looking at a liquidity sweep in this price action right here. Let's mark this one right here. We have here liquidity sweep. So this order block should be respected by the price. 15-minute order block. Now the price is trying to go higher. Remember, we are aiming for this buy sell liquidity right here. Let's try to go into the 5-minute time frame to see more price action. As we can see, price went down. Let's look into the lower time frame. Maybe we have taken out sell side liquidity, and yes, we have. Right here, we have a sell side liquidity taken. Now we wait for a market structure shift right here. Alright, so let's look into the 2-minute time frame to see if we have any fair value gaps. Alright, so we are waiting for a market structure shift, and we have it. We have here market structure shift. This is the last swing high that has taken out the liquidity. We have a swing high, and we have here a fair value gap. Let's mark out this fair value gap. You can enter in this fair value gap, and then you can place your stop loss in the nearest swing low. You can place your stop loss right here, or you can place your stop loss in the midpoint of this long wick right here, since we have a very long wick. And then you can aim for only 1 to 2 risk to reward. This is the safest. Take profit, go. Right, so we can enter in this fair value gap. Let's see what the price will do. And as we can see, price has respected this fair value gap beautifully and is now trying to go higher. You want to see price continue moving higher now, since we have already respected this fair value gap. Alright, so as we can see, price tried once again to go lower. But since we have this bullish PDRA right here, price should respect our PDRA and it should continue moving higher. And we're very close into our take profit, and there we have it. Take profit hit. Right? So as we can see right here, once again, we have here sell side liquidity. This sell side liquidity has been taken at the same time reacting into this 15-minute order block right here. This is our last swing low that has taken out the liquidity. Price went higher, displaced above that swing high. We form a fair value gap, enter into that fair value gap, and then target the nearest buy sell liquidity. In this case, we are only targeting 1 to 2 risk to reward. And there we have it. Take profit hit. So we have a very easy setup. This setup right here happens every single day in any financial markets. But sometimes we just have ugly price action. That's why sometimes our setup fails. But still, always use money risk management in your trading, because losses are inevitable in trading. Backtest this setup, backtest our setup as many times as you want. You can use the My Trading Journey and our Discord server so that you can backtest it with live market data from TradingView. You can also demo trade it. You can practice this as many times as you need in order to get used into our setup, right? So that's it for this video. I'll see you on the next one. Peace out.